So let's start with question number 8. Bengal Limited acquired 12,000 shares of Barkar Limited of the value of a full value of rupees 10 each at price of 1,70,000. So this is what cost of investment, 1,70,000. Yeah, how much is the cost of investment? 1,70,000 for 12,000 shares on 1/4/2017. Again, this is the beginning of the year. The balance sheet of the two companies as at 31st March 2018 were as follows. So at the year end, they have given after 1 year. So that means this is consolidation can be done on the date of acquisition. Also consolidation can be done. So that day, post acquisition treatment will not come up because on the date of acquisition, all are opening balances. Got it?
Yes, sir.
So if you are consolidating after 1 year, so that means it is like post acquisition consolidation, what we call. So that time, so few adjustments what we did, what we supposed to recognize on the date of acquisition, like goodwill, capital reserve, this and all we supposed to compute on the date of acquisition. At the year end, this will be reversed. Got it? This will be revised. That's it. So whatever that reserves and surplus are there, intercompany goings, this and all may be post-acquisition treatments. But goodwill, this and all on the date of acquisition, this will be. Only once, not every year we will compute goodwill or capital reserve. Got it?
Yes.
Only on the date of acquisition we will recognize the goodwill or capital reserve, and we will recognize it. So thereafter, if goodwill is there, so at the every year end, so as per India's 36, it will be tested for impairment. Got it?
Yes, sir.
If capital reserve is there, that we will add to the equity, that is other reserves. So we will add to equity and we will carry in a balance sheet. Continue reading. Liabilities consist of share capital of rupees 10 each, 10 lakh and 2 lakh. General reserves completely it is 1/4/2017. Completely it's the opening balance.
Yes,
Opening
sir.
balance. So that means here no need to split. So out of total, that is in the absence of information, what we believe. So balance sheet, whatever the figures are given, that is as on the date of balance sheet, that is the closing figure. Out of that, we would have analyzed opening and closing. Yeah, but here they have given clearly general reserve. It's the opening balance is 4,20,000 and 1 lakh. Yeah. So sundry creditors 2,40,000 and 92,000. Bills payable 80,000 and 60,000. Profit and loss account again it's very nice 1/4/2017 completely opening balance. Completely opening balance and profit for the year ended. That means it is current year they have given separately 170 and 45. Got it? Assets consist of so very first of all itself bouncer already goodwill is there. Correct? Already what we have
Goodwill.
book value of goodwill is there, correct? So now, sir, what you are trying to say is suppose if it is look out, if goodwill is not there on account of consolidation, in step number 6, we may end up with goodwill or capital reserve, correct?
Yes, sir.
Yeah. So there, suppose on consolidation, equity investment, preference share investment, debenture investment. Suppose if that is the case, in equity investment, if there is a capital reserve and preference share investment and debenture investment in subsidiaries, suppose if you get the goodwill, that goodwill can be offset with your capital reserve. Got it?
Yes, sir.
Yeah. So because that is the same nature, it has been emerged. But this is book value of goodwill. Suppose even though if you get a capital reserve there, you should not set off. Got it?
Yes, sir.
Because this is book value of goodwill already it is there, it is a purchased goodwill. Clear?
Yes, sir.
Yeah. So that means it is a someone's business we have acquired, goodwill is there. Now, if you acquire someone and if you have a capital profit, can you set off with this? Our stomachs are different here. Yes or no? So, book value of goodwill. So, this should not be set off. So, as it is, this 3 lakh plus 70, 370 will appear in your balance sheet, consolidated CPS. So, if any other goodwill, suppose if it's appeared on a cost of control, that also will be get added. Next,
Yes,
land and building 4 lakh and 1 lakh. Plant and machinery 5 lakh and 1 lakh. Stock 2 lakh and 40,500. Debtors 3 lakh and 1 lakh 34,500. Investments 2 lakh. Investments, wow, investments 2 lakh is there, Pramod. I'm really very surprised, you know. So wrongly printed, huh?
Yes, sir.
Yeah. So investments are here 1 lakh 20, 1 lakh 70, no?
Yes, sir.
Yeah. So here wrongly printed, right?
Yes, sir.
Wrongly printed. But
Yes,
actually,
sir.
it is correct, Pramod, because here the word is not. The word is not investment in Barkar Limited 2 lakh. Correct?
Okay.
Here investment. So out of 2 lakh, 1 lakh to 70,000 will be cancelled on consolidation. This is what intercompany holdings. Got it? Yeah. So balance 30,000 is outsiders. 2 lakh minus 1.7 lakh. So balance 30,000 is outsiders. Outside investment. So that is other investment which will continue to appear in CPS. That means in this problem, investment, non-current investment, 30,000 will come. Got it?
Yes, sir.
Yeah.
Sir.
So bills receivable 20,000 and 30,000, cash at bank 80,000. But finally, balance sheet is not this total. So copy this total this side, 20 lakh and 5 lakh 37,000. 5 lakh 37,000. Yeah, continue reading. Additional information: stock in the it is not a bank, it is the books of stock in the books of Barkar Limited includes goods purchased from Bengal Limited for 20,000, which includes profit charged by later company at 25% on cost. 25% on cost. So therefore here, so URP adjustment is there in step number 7. Next, both the companies have proposed 10% dividend. Please strike off this line itself. Please strike off. Yeah, sir, why?
Good.
So, yeah, as per Ind AS 10 itself, so it is non-adjustable event. It is a
Yes, sir.
non-adjustable event. So proposed dividend should not be adjusted. It has to be adjusted in the year in which it has been declared. So therefore, because on the balance sheet date, whether the company has earned the profit or not, we don't know. Whether we are going to declare the dividend or not, we don't know. So therefore, as per India 10, it has been treated as a non-adjustment event. So therefore, proposed dividend adjustment should not be done. Since it is a old problems we have taken in old as per AS4 earlier before amendment in 2016. So it was there. So thereafter, this adjustment is supposed to be removed.
Yes, sir.
Okay, so therefore this should not come. Out of this, that means, sir, what you do? Nothing. If proposed dividend means I would have reduced from P&L. Now I will not reduce, as it is full P&L. I will distribute to the shareholders. That's it. Got it?
Yes, sir.
Yeah. Now, out of debtors and bills receivable of Bengal Limited, so 50,000 and 16,000 respectively represented due from Barkar Limited. So here, so one adjustment was here investments are other outside investments are there. So then second was stock reserve URP is there. Third one intercompany owings. That's it. Yeah. Should I throw the answer quickly?
Yes, sir.
Yes. Quick.
8.
Yeah. So solution. Question number 8, page number 26, solution. Solution. So, working notes. Working notes to start with. First is step 1, date of control. Date of control. So, date is given, which is 1/4/2017. Then, step 2, shareholding pattern. Shareholding pattern. So, under shareholding pattern, first is Bengal Limited. Bengal Limited, so which is 12,000 shares out of 12,000 shares out of 20,000 shares, sir.
Yes.
So therefore, it is into 100. If you do, it is 60%.
Yes, sir.
60%. So therefore, what is non-controlling interest?
40.
40%. Total 100%. Yeah. Next, step 3. Step 3 is analysis of
Profit of
analysis
subsidiary.
of profits of subsidiary, analysis of profits of subsidiary, here Bengal Limited. Bengal Limited. Bengal Limited. Yeah, Bengal Limited. To start with,
I said
So Bengal Limited is the holding
sorry.
company.
Yeah, you are correct. Barkar Limited. So because one of our student asked that doubt, no. So Bengal Limited she used, that was retained in mind. Sorry. Let's go. First one, EA. So which one is the first reserve we supposed to analyze? Always
then
general reserve. General reserve. So closing balance. So as per balance sheet, it is there 1 lakh. 1 lakh. But they have given this date is 1/4/17 clearly. Therefore, this complete 1 lakh termed into capital profit in our language. Correct?
yes, sir.
Then, so in this problem, there is no revaluation as of now. There is no revaluation. So therefore, B, profit and loss account. Profit and loss account. So here, profit and loss account, we have the profit and loss account opening. That is 1/4/17. How much was that? 40,000. 40,000. So this will go to profit and loss account. This one. Then second one, profit and loss account. So this current year, which is 45,000. So this 40,000 will be termed as capital profit. This is termed as revenue profit. Are you understanding?
Yes, sir.
Yeah. So that's it in this problem. So I think no other adjustments. Let's go to step number 4. Step number 4. Step 4. Apportionment of or
Profit.
appropriation of profits. Appropriation of profits. So we have capital profit and revenue profit. So capital profit first is general reserve. So general reserve complete 1 lakh is a capital profit. So then profit and loss account. So 40,000 and 45,000. That's it in total. 1,40,000 and 45,000 less share of non-controlling interest at 40%, which amounts to 56,000 and 45 into
18,000.
40. Yeah, 18,000.
Yes, sir.
18,000. So therefore, what is the balance of Bengal Limited?
84.
Share of Bengal. 84,000.
27,000.
84 and 27.
Yes, sir.
27,000. 27,000. Okay. So this will go to step number 6, cost of control. This will go to step number 8. Now let's go step number 5. Step number 5. Step number 5, non-controlling interest. At 40%. Non-controlling interest at 40%. So first, share in capital, total is 2 lakh into 40%, which amounts to 80,000. Capital profit, share of capital profit, which amounts to 56,000. Then revenue profit,
In
18,000. Revenue profit 18,000. So therefore total to CBS, 1,54,000. Then step number 6, cost of control. Cost of control. So here also liability route. Liability route. To start with, first is cost of investment. Cost of investment. So cost of investment is 1,70,000 now.
yes, sir.
Yeah. Less pre-acquisition, dividend, nil. Therefore, net cost of investment, less share of net assets, share of net assets, in that share in capital, 2 lakh into 60%, which is 1,20,000. Capital profit. Capital profit, how much was that? Friends, capital profit?
27,000.
20,000.
27,000.
84,000, no?
Yes, sir.
84. So 2,04,000 is your share. So balance what you get is capital reserve. So that is gain on
Bargain.
bargain purchase. Gain on bargain purchase, which is
34,000.
34,000. 34,000. Correct? Here write the note.
Yes.
Note. So this capital reserve not to be set off. Not to be set off with book goodwill. Book goodwill. Are you understanding slowly? So
Yes, sir.
here, suppose here look out equity investment. Here we are getting 34,000 as a capital reserve. Suppose if I have a preference share investment as well as debenture, there if I get the goodwill on account of consolidation, both are emerged. Goodwill as well as capital reserve on one investment and goodwill on another investment. That you can offset. But book value of goodwill already if it is there, that you should not write off because it has to be tested for impairment. You should not be write off by comparing like this. Got it?
Yes, sir.
Yeah. So let's go. Step number 7. Intercompany owings. Intercompany owings. So here intercompany owings, only thing we have is a debtor and bills receivable. So therefore A. So first is debtor creditor. Debtor creditor. So therefore, so here total debtors, total creditors. So this is total as per balance sheet. This is both. So total debtors, my dear friends, it is 3 lakh plus 1,34,500. It is 4,34,500.
Yes, sir.
4,34,500 as per balance sheet. And the creditors 240 plus 92, so 332. 332. 3,32,000. 3,32,000. Out of that, what is less? Mutual owings. Mutual owings is 50,000 and 50,000. 50,000. So therefore, what is balance to CBS? Balance to CBS, which amounts to 3,84,500 and 2,82,000. Like B, bills receivable or payable. Bills receivable or payable. So here PR, BP. Let us take. So total as per balance sheet, both companies put together, total BR, it is 20 plus 30 is 50,000 is a BR. Bills payable is 1,40,000 in total. 1,40,000. So less mutual owings.
16.
Mutual owings is 16,000. So therefore, so balance is balance to CBS. Balance to CBS, which is balance to CBS is 34,000.
Yes, sir.
34,000 and 1,24,000. 1,24,000. So here, and there is a URP also, stock, they have supplied at 25% above the cost. Therefore, C, unrealized profit. Unrealized profit, so which is 20,000 into 25 divided by 125, which is 4,000. Yeah, because cost is 100 means plus 25% is profit on cost. So therefore, sale price is 125. Sale
Yes, sir.
price is 125. Therefore, this represents 125%. On that, I required what is 25% margin. So therefore, 4,000. And since it is a downstream completely step number 8. Got it? So because it is stock of Barkar Limited. So stock of Barkar means who would have supplied? Bengal Limited, which is holding company. Got it? Yeah. So step number 8. So step number 8. Reserves for CBS. Reserves for CBS. Reserves for CBS. So first is here general reserve. General reserve, profit and loss account. So therefore, first general reserve. So first is Bengal Limited. Bengal Limited balance. As per balance sheet, Bengal Limited general reserve. So what we have is 4,20,000. And P&L, what we have was Bengal Limited opening balance. P&L Limited is P&L is 90,000. Then P&L for current year, which is 1,70,000. So this is Bengal Limited's opening balance. Bengal Limited opening balance and P&L current year balance. So both. So now let us go for add share of. So share from subsidiary, na? Share from subsidiary. Share from subsidiary. So here revenue reserves nothing. So therefore revenue profit. Revenue profit. So how much?
1,000.
Revenue profit 1,000. Huh?
27,000.
27,000. Revenue profit in total 27,000. Out of that, only thing what we have to reduce is less unrealized profit. Step number 7. So it is 4,000 we have to reduce. So except that, I don't think so, nothing. So total for CBS 4,20,000 and 1,83,000. And it is 1,83,000.
2,83,000.
Yeah, 2,83,000 na. 2,83,000 na.
Yes, sir.
Okay, 2,83,000. Now let's go with the required solution. Required solution. Required solution to start with. So consolidated balance sheet of Bengal Limited and its subsidiary Barkar Limited as on 31st March 2018. Yeah. So to start with, so first is assets, and we have note, we have amount. So to start with, my dear friends, so whatever the balance sheet figures are given as it is, just we have to go through. So no additional things we should think. So now to start with, first one, non-current asset. Non-current assets. In non-current assets, first one which will come, property,
Property.
plant and equipment. Property, plant and equipment. So here, so we don't have any adjustments, my dear friends. So therefore, no, land and building, plant and machinery. So split is there. Therefore, let us give note number 1. If it is a single asset, I would have written plant, property and equipment hyphen land and building, and I would have sum of total. Since more than one line item is there, better let us give a note. Next, after this, so we have, my dear friends, financial asset. Do you, so intangible asset is there. Intangible asset, so goodwill. So goodwill total 3 lakh plus 70,000, in total 3,70,000. Next, uh, we have financial asset. Financial assets. Under financial asset, we have non-current investment, outsiders. So 2 lakh minus 1,70,000, which is cost of investment, has been cancelled. 1,70,000 cost of investment which is cancelled. 30,000 will come in CBS. So in this problem, so this is what new. This is what new. Yeah. Next, after non-current investment, so we have number 2, current assets. Current assets, under current assets, inventory, note 2, because unrealized profit is there, therefore we have to give adjustment. So thereafter what all is there, stock is over, debtors, investments, this and all are other financial assets. So therefore here financial assets, under financial assets, first is trade receivables, note number 3, then
Cash and bank.
cash and bank balance. So here nothing, we can sum up 80,000 plus 62,000, in total 1,42,000, you can sum up. Yeah, so that's it for the total. Then if you come to equity and liability, equity and liability, equity and liability. So in that serial number 1, shareholders funds, in shareholders fund, first is share capital, so other equity and non-controlling interest, so this is step number 5 is supposed to. So share capital, always holding company only will come, but in examination this only you write, you have to write with schedule, my dear friends. So that note you have to give. So here only holding company share capital note is not required, single line item. So I am giving 10 lakh directly, but in exam you have to write with the presentation opening is 10 lakh, during the year no changes, closing balance is 10 lakh. If any changes are there, that you have to insert that to holding company. Next, other equity, we have to give it note number 4. Note number 4, non-controlling interest, step number 5. Step number 5, non-controlling interest, how much, Pramod?
1,54,000.
Yeah, 1,54,000 we have to copy. So if you know balance sheet how much space required, so that you can, for that space you can leave it first required solution, thereafter all 8 steps you can go with working note. Got it?
Yes, sir.
Yeah, since you don't know how much, what is the size of a balance sheet and how many notes it will come, so in that absence of planning, so you can go with first working notes, then required solution. So now after non-controlling interest, so here do you have anything called long-term borrowings? Nothing.
No.
So therefore, secondly, current liabilities, under current liabilities, sundry creditor, bills payable only is there. So therefore, all put together is called as financial liability, na?
Yes, sir.
Financial liability. Financial liability, under financial liability, it is trade payables, which amounts to trade payables, note number 5. Trade payables, note number 5. Yeah. So now let us go to notes forming part of balance sheet. Notes. Note 1, property, plant and equipment. Yeah. So no adjustments. So kindly proceed. So land and building. Land and building. So which is 4 lakh plus 1 lakh. It is 5 lakh. Then B, plant and machinery, five lakh plus 1 lakh. Therefore, 11 lakh. Total, it is 11 lakh. Note number 2, inventory. Note number 2, inventory. So now inventory of Bengal Limited. Bengal Limited inventory is 2 lakh. Barkar Limited 40,500. Total 2 lakh 40,500 less unrealized profit 4,000. Step number 7. So therefore, what is your net? 36,500. 2 lakh 36,500. 2 lakh 36,500. 2 lakh 36,500. So then note number 3, trade receivables. Note number 3, trade receivables. So for this you have to take the figures from step number 7. So A, trade debtors. B, bills receivable. So both you have to take from step number 7. So go and get the figure. Debtors
384.
3,84,000 and bills payable, sorry, bills
34,000.
receivable 34,000. In total 4,18,000.
Sir, I guess it is 384 500.
384,500. 384,500. So therefore here is it 4,18,500?
Yes, sir.
4,18,500. 4,18,500. So
21 lakh 55,000.
4,18,500. 71 lakh.
21 lakh 55,000.
21 lakh 55,000. Yeah. So now other equity. Step number 4. Step number 4. Other equity. So other equity. So first is particulars. So here what and all will be there? First is share application money. Share application money. Then equity component. Equity component, that's what other equity component we call. So thereafter our resource of surplus will start. In that first is capital reserve, then retained earnings, what we call it as P&L, then other reserves, here what we call general reserve, then total. So here whatever you have produced in step number 8, you have to reproduce actually if you have not shown working note like that. Since already in a working note we have shown there, so here I can say directly. So what is general reserve? General reserve and profit and loss, then capital reserve. Got it?
Yes, sir.
So now capital reserve, it is 34,000. General reserve will go to other reserves. So how much money from general reserve? Step number 8. General reserve 4,20,000.
Yes, sir.
4,20,000. So retained earnings P&L put together P&L, P&L, 1,83,000.
Yes, sir.
1,83,000. So now total.
83,000.
So since already everything is adjusted, I am taking net figures for the just presentation. So in step number 8, if you would have not done, my dear friends, you have to reproduce same step number 8 in order. First is opening balance of holding company. Thereafter add current year profit. So then whatever the adjustments in current year P&L, you have to adjust. You have to deduct plus or minus, you have to do. Then share from subsidiary. So one on one you have to keep on adding in the India's language, like share from retained earning, dividend, etc. Like this, it will be keep on adding. Yeah. Now, so total 4,20,000, 1,83,000.
Sir, 2,83,000.
Oh, I'm sorry, 2,83,000, 34,000. So then in total,
7,37,000.
7,37,000. Yeah. So 34,000, 2,83,000, 4,20,000. In total, 7,37,000. So 7,37,000. So trade payables, copy from step number 7. So note number 5.
Yes, sir.
Trade payables, trade payables, out of that A. Trade creditors, B. Bills payables. Both are from step number 7. Step number 7. So copy trade creditors. Trade creditors. It is 1,82,000.
2,82,000.
2,82,000 na. 2,82,000.
Yes, sir.
Then bills payable
1,24,000.
1,24,000. Therefore, net
4,06,000.
4,06,000 is total. Yeah.
Balance sheet note.
Not tallied.
Oh.
Not tallied.
Yes, sir.
Balance sheet not tallied. How come? Yeah. Creditors is 1,82,000, I think.
Sir, my calculation is wrong for the first part. Balance sheet is tallied.
Okay.
22 lakh 9.
I think it is 22,97,000 is balance sheet total.
Yes, sir.
Yes, sir.
22,97,000 is your balance sheet total. It will tally. So previous what he has given, that total was wrong.
Yes, sir.
So it is 22,97,000. 22,97,000 is the balance sheet total, which is correct. Yeah. So this is end of row number 8. Row number 8. So this is how slowly in a depth each and every consolidation problem we are doing, my dear friends.